Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. This is a picture of me. I am the goat of debt payoff, according to ChatGPT. And I asked Meta AI, please draw the goat of debt payoff, greatest of all time. And that's me, right? So I'm just flexing again and acting like I'm so bored of talking about paying off debt. And it's just another excuse for me to do another velocity banking review. And you take a look at this, paid off my mortgage in 2 years and 9 months. 2 years and 9 months, okay? So, yeah, let's just go ahead and do another velocity banking review. What is velocity banking? All it is a debt payoff strategy where you dump all your money into a line of credit, right? That's all it is. It's pay off your debt with the help of a line of credit. Simple. Okay. And so all we need is two things. Number one is a budget. So when we do our budget, we list every single debt that we have, three credit cards, three auto loans, a mortgage, and then our general expenses, food, gas, insurance, and all the other good stuff, right? And we assume two things. Number one is the same income, and number two is the same expenses. So let me go ahead and copy the expenses here. And here's the crazy part that most people can't handle is that you're not going to have any savings, right? Have you ever thought like, hey, when I get paid a lot of money, I'm just not going to save it? Well, that's what we're doing here, especially if we have debt. And that's how I became the goat of debt payoff. You could be a goat too, be the greatest of all time in your local area. I'll be on YouTube. No, I'm just kidding. But yes, when you do get paid, and whatever comes into your checking account, I just make sure that in the same day my available balance is zero. So on my checking or savings or whatever, there's no money in there. And a lot of people would freak out. I was like, "Don't you need an emergency fund?" It's like my line of credit's my emergency fund. And what's a line of credit? All it is a financial tool where you can borrow money, pay back, and use it over and over again. So I got this 7.5% home equity line of credit. And you don't need a home to do this. If you do a personal line of credit, you get like 15. I got like how much? $45,000 in personal limits, personal lines of credit. But here I got a home equity line of credit, $280,000. Okay. So I could literally go to a bank's website, click a button, and they'll dump $280,000 into my checking account at a 7% interest rate. Okay. So let's just assume that for this example, we have, let me just check how much credit card debt we have. 27, 35, 18. Let me just check. We have an $85,000 line of credit. Now, why do I use 85,000? Because when I do these demonstrations, I like to make them simple. And most likely you're not even going to have a free and clear line of credit at that point, right? Because what do we know about banks? They don't lend money to people who need it, okay? And this is why what's funny is I learned all of this before I even was able to tackle on debt. I was like, "I'm gonna pay off debt, and I'm gonna get a line of credit," and I was like and once I did it, I was like, "Huh, that's a lot easier than I thought it would be," right? Oh, okay. So, yeah, again, if you wanna see an actual scenario, real life case study, 22 debts with the maxed out line of credit, join the Google not I mean, I'm sorry, let me rephrase that again. Join the YouTube channel, only 99 cents. We have live streams. We talk little bit more about stuff in detail, including velocity banking. And it's only 99 cents. So I just do the Costco demos of velocity banking here, and I make it really easy for myself. So if you think it's bad, then that's cool, man. Like I honestly, you could tell me like none of this it works, it's all a scam, and I'll be like, yeah, you're totally right, man. But let me look at the a picture of myself about and how quickly I paid off debt. Hmm, interesting. All right. So let's go ahead and move this debt into the line of credit, right? So we'll say not 62. I totally forget. Was it 82? Hold on. 27, 35, 18. Let's do this. 80,000. Okay, let's move 80,000 of credit card debt into the line of credit. Okay. And so we do that, and guess what happens? 0, 0, 0. Oh, look at that. We went from negative $50 to $2,572.22. And now the final step is dump our entire money into the line of credit, take our expenses out, and rinse and repeat over and over again. And that's it. That's really it. Okay. So let's go ahead and do the calculations. And I'm just going to do this. And then we're going to do this and this and this. H2 minus whatever our cash flow number is, 2572.22. And then we take the average daily balance, multiply it by the interest rate, and then divide by 12. Heck, I know that with home equity lines of credit, you get higher limits. In fact, my first home equity line of credit was 15,000. It was 15,000 and at 10% interest rate. But they gave me a 0% introductory rate for like 6 months, I think. I was like, sweet, sweet. And then I don't think they gave those out anymore. And then I refinanced, got a new home equity line of credit at 50,000, and now my current home equity line of credit is 280 thousand dollars at a 7.5% interest rate. You'll notice when you do the math, the interest rate kind of matters, but it doesn't. But it's not like, even when you go from like 0 to 11, it's like it's not as much interest as you thought you would pay, and I can just demonstrate that. So let's go ahead and copy this and go ahead and pay it off. And so now we see that in 35 months, it's all paid off, right? So now here we mark our milestones for 35 months. We paid off our 80K of credit card debt, right? So less than 3 years. And now it's time to pay off these auto loans. So we have an auto loan. Hold on. Did I do this right? Let me make sure this is right. And I don't think I did this right. So I did a demonstration previously on the YouTube channels. So if we take a look here, right? I did one where it was like bought 22 rental properties and regret it. And I was like amazed because when we did this strategy, it only took on average 6 months to pay off the property. It was insane. This little young lady was like, I bought 22 rental properties and I think I'm broke, even though I make $600 of cash flow a month, which is insane for a rental property. So let's go ahead and do this right here. And all right. So let's fill out the deets, the numbers, right? So 12000 200 and 3%, 7%, 3.996. Auto loans are all 5 years. Mortgage is 30. And hold on. This is a loan calculator that I created. So if you have any amortized loan and you want to auto calculate the payment amount and all that good stuff, you can use it here. And I'm just going to put in the current month, which is 35 months. So 35, 35, 35, 35. What's the current balance? These are the current balances. And what I'm going to do is I'm going to move all these into the line of credit. And then we're going to put all the money or all of our paycheck into line of credit and pay it off. So it's going to go ahead and do that. And so I'm going to sum up this. We're going to take out G7. Okay. Whoopsie, G4. Okay, so we have these 3 auto loans, 25 grand. We're going to move it into the line of credit. All right. So now plus 25602.63. And when we move loans into a line of credit, right, then we just increase our cash flow. So I'm just going to do this 0, 0, 0, right? And now our cash flows increased to about 3.6 grand. So we're going to now update our cash flow number to 3.6 grand. So let's go ahead and do that right here. And I'm going to do this 3656.79. And let's see how fast it pays off in 43 months. So 3 cars in 43 months is not bad. I mean, if what's 43 minus 35? All right, that's about 8 months. Interesting. 3 cars in 8 months. Technically, it's 43 because it's like a combination of paying off the credit card and you're still making the monthly payments to the auto loans. But when we focus all our money into the auto loans, it didn't take that much, about 8 months for 3 cars. All right, so now how much is that? 80 plus 25 plus 12. It's 117K. Okay. And so now we're going to go ahead and tackle on the mortgage. And, a lot of people, when they see these demonstrations, they get really angry because they're always thinking about today's price. But there are tons of people with mortgages, like, that they got in the early 2020s that are like 3%. And to be honest, like even 5 years, your mortgage balance is going to be relatively the same. Right. But I just, I like to show these low interest rate mortgages as well to show that the strategy is still valid if you use a line of credit. Now, a lot of people freak out because they're like, "Oh my goodness, 3%, why would you move it to an 8%?" And my explanation of this is the fact that you're actually going to do it. Most people when they have leftover cash, and I actually talked to a gentleman like a couple weeks ago where he said, "Okay, my only loan that I have is a mortgage." Okay. And he said, I just put an extra $100 into it. And then I said, well, what do you do with the rest of the money? I just save it. It's like, well, why do you not just dump the whole thing into the line into the mortgage? And he says, I'm afraid to. And I just said, okay, well, here's an alternative to that. That even if you use an 8% a line of credit, like yeah, you might have to pay a little bit, right? Because it's not like the number does matter, but it doesn't really matter. And by the time you're here, right? By the time you're here, you should be fine. Like it's not that hard to pay off your debt once all your other debt is paid off. And so, or I'm sorry, your mortgage when all your other debt is paid off. But the most important thing that we have to understand about the mortgage is that we pay it off last, right? Why do we pay it off last? It's because in order for us to get this $843 back, we have to pay $200,000, right? But take a look at just this credit card right here. In order to get $1,100 back in our cash flow, we only get 35 grand, right? So we have to kind of think about how much bang do we get for our buck in terms of cash flow. And you could either do either way. Now, I'm going to say this. I actually used I think a 10% line of credit into my 2.875% mortgage. It wasn't a big deal, right? Like I paid off 58 grand in the first year. And I honestly feel that if I had not had the line of credit, I wouldn't have done it. I would just been too afraid to. Number one is that if you overpay your mortgage directly, um, you don't get the money back. Number two is if you use your credit cards and lines of credit as a backup, you end up segregating your income. And this is why a lot of real estate investors, again, 22, where is that young lady right here? 22 rental properties, $600 of cash flow a month. She thinks she's broke because she's segregating her income. But again, I'm not going to go too much into details, but I've made like videos about this before, like segregation of income, how do banks make money. It's not about like the line interest rate being simple versus mortgage amortized. I've gone over that in the previous videos, but I'm just blabbing on and on. All right, so now let's go to 43 months right here. 43 months. 43 months. And so now we have $200,000 original loan, 43 months. And what we're going to do is we're going to chop up the loan into little pieces. And you could just use an arbitrary number, just the smaller the better. Okay. But I also want to kind of demonstrate one other thing too. Let's say that this were a 0% loan, okay? A 0% interest rate loan. How much would the monthly payment be? $556,000, okay? Now, I know people are freaking out like, oh my goodness, you're going from 0 to 11 or 15. I'm going to just show you the worst case scenario that can happen um, let's say you did use a 0% loan, right, for 30 years. And what's the 555.56? 556, okay? And then what's a monthly income? I don't even know. I don't even know. Monthly income is 6,500. And what's our current expenses? It is everything except for the loan we're trying to pay off. So $2,000, $2,000. And I just want to show you one thing. So let's say we got a 15% personal line of credit and we did this, right? With the $7,000 chunk. What's the worst thing that can happen when we go from 0 to 15? We overpay by 2,800, right? 2,800. Now, obviously, do we want to use the lowest interest rate possible? Absolutely. Now, here's the thing that's a big mistake that most people don't understand is that if you just say, hey, loan bad, line of credit good, and I move the entire thing into a 15% line of credit rather than doing it in trunks, again, this is worst case scenario. I'm overpaying by 95 grand in interest. That's a no bueno, right? But a lot of times people are freaking out like, "Oh my goodness, 15%." And then, all right, well, that's the worst that will happen. 2.8 grand overpay, right? Assuming that everything's constant. And so you might be like, "Well, why would I do that?" And the answer to that is very simple. The fact is, sometimes we pay for convenience, right? We pay so that we don't have to think about uh let me say this. Like if I put a direct payment into a loan, I have to know the exact amount that I'm going to pay, and when I just move it into a line of credit, I don't have to think about it. You see what I mean by that? And so that's why you might wanna do it. Now, if you're know your exact finances every single month, which I don't because actually have negative cash flow months. I've actually been negative cash flowing for the past 3 months, and the reason is, for example, I took out, some money to pay a car from the line of credit. I'm doing some repair work in the house. Like, it's something I'm doing things that cost me maybe a couple grand each, so I'm negative cash flowing. Okay, so I know, or I'm not saying I know, for in certain months I don't exactly know my finances, and I think that's where the trap that most people go into is that they think that they're going to know their finances, which I don't. But when I make it easy for myself and I just dump my money into the line of credit, that's it. That's all I got to do and not even think. That's how I paid off my mortgage in 2 years and 9 months because I really didn't have to think about what I was doing. So let me go ahead and redo this. So let's say, what's the current interest rate? And so we'll say 8%, right? So the interest rate on the mortgage is about 3. And the what whatchamacallit? 3%. So 843.21, 843.21. And then I just need to get the current balance, which is 184,440.11. 184,440.11. Okay, so 3.7 years, not bad. 3.7 years. A lot of people, here's another thing too. So let me just do this. 43 divided by 12 plus 3.7. So 7.3 years. Hold on. 7.3 years debt free. Okay. So a lot of people come to this channel to complain about how what I talk about is not realistic. And I actually will agree with that because here's the thing, every simulation that I've done with this velocity banking stuff is like, oh, I paid off my mortgage in like 3 to 7 years. I've never seen a simulation where it actually got me to 2 years and 9 months. And so when I talk about unrealistic, I'm like, yeah, totally. Because even the calculator has not been able to do what I've been able to do, right? But yeah, I mean, I totally agree with you. And that's why you're probably not the GOAT. That's why I'm the GOAT, because I even beat the calculator. I don't even know how. Okay. All right. Well, that's it for today. Also, just a quick plug. You might wonder where I learned all this stuff from. I learned it from Renatus. So if you don't know what Renatus is, it's an educational company that talks about all this cool stuff, velocity banking, um, real estate investing, and all that good stuff. And if you want to know where I bought a property in 2022, under asking price, right? I learned it from Renatus. That's where I learned it from. So if you're interested in upping up your game and not only just learning about velocity banking, because you don't want to just do something stupid like, oh, buy $1 million single family house in California and think that, oh, I'm doing velocity banking, so I must be smart. You want to actually learn how to buy real estate correct and use additional tools like velocity banking to help pay it off. So if you're interested in doing that, click the Google form link below. I make money every time you purchase an educational package from me. But again, um, you're learning from the goat with the goat, not from the goat because I don't teach directly, but you're learning with the goat, right? Learn with the goat. Can anybody type in the comments? I want to learn with the goat. Yeah, I am the GOAT, the greatest of all time. Okay, well, that's it for today, everybody. Have a great day. This is Korean Atlanta Mentorship.